Construction loans are becoming more popular than ever, and many people are choosing to build their new home. So, if you are looking to build your dream home, particularly with the continued financial assistance provided by the government with the First Home Owners Grant (FHOG) scheme, it is the best time to do it. But, before you jump on the bandwagon and obtain a loan, it is important that you understand the loan package in detail. What is a construction loan? It is a short-term, interim loan for financing the cost of constructing your new dream home. Lenders/credit providers will secure the mortgage over the real estate property you are financing, and they will make periodic payments to your builder at periodic intervals as the work progresses. How is a construction loan funded? Lenders/credit providers have different credit policies and requirements that they adopt when processing a loan application. However, most are similar. Here is a list of how lenders/credit providers fund construction loans. And GT. Lenders/credit providers will fund the loan amount required by you to cover the cost of purchasing a vacant land and for the building construction costs and GT. Before construction starts, and if you have already borrowed to purchase vacant land on which you are building your new dream home, the first loan disbursement made by the lender/credit provider will go towards paying off the vacant land and GT. Lenders/credit providers will break down the loan amount into progress payment drawdown amounts, which are made to the builder at the completion of each construction stage. How is a construction loan structured? Construction loan, whilst it is similar to a traditional mortgage, has some key differences. Here is a list of the key features of a construction loan. And GT. It is typically a short-term solution with a maximum of 1 year. And GT. The borrowers will be expected to pay interest-only payments during the construction period. And GT. Interest is only calculated against the portion of the loan amount that has been drawn down. And GT. Construction of your new home must commence within 12 months of loan settlement. And GT. Construction of your new home must be completed within 12 months of the first progress drawdown payment. When are progress payments drawn down? Lenders/credit providers will arrange to prepare valuations before progress payments are made to the builder and at the completion of each of the following construction stages. And GT. For the purchase of the vacant land. And GT. After the laying of the flooring. And GT. After the installation of the roof including the frames. And GT. At lock-up stage. And GT. At the completion stage. What happens with the construction loan at the completion of the building project? Upon completion of the building project, your loan will roll over into a standard principal and interest home loan. What additional documents are required for processing a construction loan? Lenders/credit providers will need to see copies of the following documents before issuing unconditional approval. And GT. Fixed price building contract. And GT. Council approved plans and specifications. So, don't forget to provide these additional documents along with your financial documents to the lender. If you keep all the paperwork ready, the lender will be able to provide you quick approval on your loan application. Now that you have understood everything about construction loan in detail, apply for the loan package and build your new dream home.